All right, everyone. A very good afternoon to all of you. First of all, apologies that I'm not being very consistent making these week ahead videos. As you know, I have to do other things alongside making, well, let's just say, doing trading things. So, without wasting our most of the time, let's have a look what we're gonna have next week. Let's just say this week, and basically the key point of these videos is that keeping things on radar, especially economic events, we have alongside the week, this alongside every week, and currently the dollar, the mighty dollar, is being getting very highlighted across the markets with Trump being the president, and with that he's kind of very tricky to trade because one day he is saying that he's gonna put tariffs across the board across the countries, and other day he's saying that, oh, no, we haven't decided that how much tariffs we're gonna put, and we don't have any particular date right now. So with all of those things keeping in mind, we will dive into the USD, and after that we will go to the euro area and following the other countries. So, uh, okay, so let's just have a look what we had last week before moving forward. And I just want to start with the 7th of February because we have had NFP on that day, and it was a solid beat. We do can see that the NFP was came 143K, which marginally came worse than expected, but the average earning, look at that number, 0.5%, and the unemployment rate sitting at 4%, which clearly very positive for the dollar. Uh, and also there is one thing, getting off from the topic, that in the environment of the tariffs, macro events are not on the driver's seat, and let's just say that the macro events are just inactive, and it's all about tariffs right now. So it doesn't matter that how much we emphasize these macro events this week, or maybe till I heard some articles stating that for 6 to 8 weeks or till April 1st, these tariffs gonna get the attention, not these macro events. So let's back to the labor data we had. We know that the FOMC has been trying to lower their rates, and with the economy being so resilient, unemployment rate sitting at 4%, which eventually coming back from 4.1%, and it just says that the market is not falling off the cliff. And with that, the FOMC, Jerome Powell, and along his other central banker members, they don't have to be in a hurry to cut the rates. So even though on the last week we have had CPI reports coming out, and it was a nice beat, 3%. It's kind of giving us a sign that the reflation is back on the track. Uh, So if we can start from the November, October, we have had 2.3% in October, and it's just going up and currently sitting at 3%. So what this telling us is telling us that the reflation fears are there. Data don't lie. So this data also gave the reason for the Fed to not to cut the rate or not to be in hurry. So let me show you the last FOMC meeting we had. So on the 29th of January, the Federal Reserve keeps rate on hold at 4.25%. It was widely expected with from the stir markets. The season was anonymous, and it does not include language that inflation had made progress to 2% goal as it had in the December statement. So it was a kind of a nothing burger we had on 29th of January, but uh, There wasn't much I think we have had in the Q&A session. It was just a nothing burger, and FOMC, it was just trying to stay neutral, and it was all saying that hey, we're not giving you any idea that when or how fast, at what pace we're going to start cutting our policy rate. So we know that Federal is holding on to its into its interest rate, which is positive for the dollar. We are having a labor market which is also giving us a positive and a strong economic signs. We are having a CPI report showing that the reflation is back, and the GDP is also doing very well. I think the last number was 2.3%. With all of that, the US economy is doing pretty great. But if we look at the dollar, and we see that it has been falling from this price. So when we ask ourselves that, hey, when the economy is doing so great, why we are seeing this dollar downside, which is almost 2.7%. So the reason is all about the tariffs. The premium has been already priced into the dollar, and the premium is that the market is thinking that with the win of the Donald Trump, with his tariff policy, it's gonna be stronger for dollar, because all of the manufacturing, all of the revenue the United States gonna get is gonna be positive for the dollar. But with that being the case, till he after till the inauguration, when he signed some of the executive orders, and he didn't really passed on any of the tariff let's just say he didn't sign anything any related to the tariff on his first day, and by the weekend, um, to get the Canada and Mexico on the negotiation table, he actually signed an executive order stating that he's gonna put 25% tariff on Canada and 25% tariff on Mexico, which we saw a nice pop to the upside from 107 level price level to back to 109. And after that, I mean, on Monday, when uh, these two nations had a talk with Trump. He said he's gonna postpone these tariffs till the 1st of March, and after that, the market just got a sense that these tariffs are just to get the nation on a negotiation table so that they can put their own rules on it, and and it's just not to hurt the economies across the board. So with that, now we know that that the tariffs are in on the driver's seat, and not the macro events right now. So any news related to tariffs can be market moving for the dollar. So, and also there is one news we had from the US side. It was on a reciprocal tariffs, and the president of the United States was supposed to give it uh, on I think on Friday or Thursday, I kind of recall it. But a long waited message on reciprocal tariff was out, and it was more or less like a nothing burger, because market was pricing that the reciprocal tariffs going to get implemented on UK, US, and China. But he mentioned that the tariffs going to be on cars and pharma. We know that, but there was no timeline. There was no countries that were excluded, and more importantly, there was no any concrete timeline, which leaves us the impression that that he will most likely use the tariff to threat as negotiation tool. So keeping in mind that tariffs are the major market moving news right now, all we're gonna see for this week. Okay, let me just open up for this week. All we wanna see what the Donald Trump has to say on Tuesday. And I think that's it. The major event for the US dollar for this week is what Donald Trump has to say on February 18th, 10 p.m. Atlantic Standard Time. And also, we are having flash manufacturing PMIs and services PMI numbers, which are also important. Uh, but uh, if we did not get any stronger numbers out from the manufacturing or services PMIs, I think any news from President Trump coming out in between these days can really move the markets. So, from a macro event point of view, we're just having one major data. Other than that, it's just a boring week. Uh, Flash manufacturing and services PMI, and from a not from a macro event point of view, we're gonna have President Donald Trump speaking on Tuesday, which is also, as I said earlier, is gonna be very important for all of us. So that was the U.S. Side, and key points to keep in mind is that Fed is not in hurry to rate cuts. Reflation, we are seeing a reflation signs. We are having a tight labor market, and we have had quarter four GDP coming out 2.3%, which is showing that economy not falling off the cliff, which is eventually lead to the stronger dollar. But with the tariff right now as got priced in as a risk premium, we need to understand that any news not reflecting or little loose on tariffs from President Trump's side gonna leave dollar downside. So all eyes on what he has to say on Tuesday, and lastly Friday flash manufacturing and services PMIs. Now let's talk about the eurozone. Just okay. So from a euro side, we haven't had anything really market moving from an economic point of view uh, on the last week, and from this week we just gonna have one event that's gonna happen on Friday. Again, it's gonna be manufacturing services PMIs. Remember that from euro side we get first French, and then we get German, and lastly we get flash manufacturing PMIs. And all from all of these numbers, the major one's gonna get focused on is gonna be the first one releasing at 4:15 a.m. Atlantic Standard Time. It's gonna be from the French side, followed by the German, and least important gonna be flash manufacturing and services, because market tend to get a sense that which way these final numbers gonna get landed. If we get really positive numbers from the French side, from also from the German side, it's gonna be very widely expected that the final manufacturing services PMI is gonna be also on the positive side. Now, let's have a look. Let me just open up that ECB right here. So I think I forgot to flip the screen. So I was saying French and German is gonna be both the important one, and the flash manufacturing PMIs are gonna be the least important one. So I have already spoken about it. Just forgot to flip the screen. So let's back to the ECB rate decision. Last time we on 30th of Jan, the ECB cut rate by 25 basis point, and outcome was as expected. Okay, so it was a pretty much a neutral outcome we had. Nothing surprising that we could have worked with. From economy side, we are having some sign of reflation. We do know that there is a very sluggish growth going on in the EU, and there is a weaker labor market. And also on the note side, if I may show you that we're gonna have a German federal elections happening on 23rd of the February, and right now, according to the polls, CDU is leading the polls with 29% approval rating. AFD is sitting at 21%, and SPT and other followed by that. So German federal election is going to be important, but not as important as the talks about going on Ukraine and Russia war peace deal. So if that happens, it's going to be very positive for the eurozone. So key point keeping in mind from the eurozone side is that right now the key driver for euro is peace deal. Okay, if the peace deal happens, it's going to be very, very positive for the eurozone because there's no war and the okay, just give me a second. And all right, so sorry about that. I just had to go for an urgent work. Let's just say that. That's a nice excuse. So anyway, let's back to the ECB. So making it short, just keep in mind that two things. First thing is the Ukraine Russia peace talk. If we get that, it's very positive for the Eurozone. And the second thing is the German elections. Making the government is the major thing because the more the coalition happens in the parliament, it's gonna get more trouble for to get any bill passed from that parliament. So other than that, we do know that from an economic point of view, eurozone is not doing that great. And the third thing to keep in mind about the tariffs happening from the US, I think reciprocal tariffs. So as I said earlier, that it got postponed, I think till April, 6 8 weeks. But any news related to that can move the eurozone in any direction. So deal positive for the euro, good results from German elections, positive for the euro, and also uh, uh, no tariffs or less tariffs or no trade war is also positive for the eurozone. Now let's move to the next currency pair. So uh, Canadian pair. And this pair is gonna be interesting because this pair is all about the tariff. So let me just start with the strong employment number we had. We had 76,000 people getting employed, which really beaten the market expectation by 25K. And we have seen a little cool down in the market, 6.6% unemployment rate, which is very good for the Canadian economy. So, from the labor to the CPI, Tuesday happening tomorrow. All eyes on this number, but I do have a trade plan, and just wait for that till I get there before we have to go to some of the other things. Let me just have that right here on my screen. So, Bank of Canada reduces policy rate by 25 basis points to 3%, and they announced end of quantitative tightening. Uh, they do have increased their inflation forecast year of year. They're expecting that CPI to land 2.4%, 2.3 for longer, from 2.2 and 2.1% for 2026. And also they have modestly lowered their GDP forecast. It was pretty much a neutral, or let's just say this policy decision was nothing burger for trader like us who making earnings from these rates. Just it was a nothing no dollars. Let's just say that. So from a policy point of view, they do have decreased 25 basis points, and they have changed did a minor changes in CPI and GDP numbers. We do know that their inflation is under 2%. Uh, so currently, their year of year, I think this is the problem with the forex factory, that they don't give us all of the numbers. Let's just move to trading economics this week. So here we are, CPI numbers, Tuesday. So inflation year of year clearly sitting under to a 1.8%, and the consensus also that the inflation will stay at 1.8% year of year. Uh, we do know that the GDP numbers also are very weak, but as I said earlier, that these macro events are not the key drivers right now. The tariffs are. So if we just look at this, let me just go one, and here that pair is. So if we just look at a higher time frame, we can see that this pair has a lot of potential to get down from here to 1.40 level. And to be honest, we can see some pullback, and I am expecting this pair to go back to 1.38 level. So however, this is all my thoughts right now. uh, so these are all my thoughts. I'm expecting that this pair has some potential reaching that 1.40 level, and can show us a little retracement back to 1.41 before heading continue to the bearish side. So uh, from a trading scenario point of view, all I'm looking to buy the CAD no matter what the data comes. If the data comes in better than expected, I will jump in right away. If the data comes in worse than expected, I will buy the cat at a cheaper price. So that is the trade plan I have for Canadian dollar. Other than that, I don't think so. I don't right now I just don't want to stay out of the cat. The last reason why I got from the Canadian dollar is what is the US inflation numbers coming out much better than expected, and right now biting my teeth that why I got out from this trade, but think it is what it is. So that was the Canadian side, and other than that, we are not gonna have anything much to focus on. From a event side, core retail and retail sales are not giving me some excitement. Uh, BOC Governor McCallum is speaking also on Friday. Maybe he can give us something new to work with. Other than that, it's just gonna be a nothing burger for CAD. Now, moving to the Swiss franc, the next one pair. We have had very little coming out from Switzerland. If we look at the last week, other than the CPI report coming out, month on month came in negative 0.1%. If I just show you here, I was just looking at these Switzerland numbers. So inflation number last came in 0.4%, which was worse than expected, but month on month stayed at negative 0.1%, which is right here. This is not the full economic calendar. We also had year of year, but it's just cheaper one. So uh, if we just have a look, if we just look at the historical data, let me just pull out on the screen for you all. S&B policy decision they did on 12th of December. We all aware of that, and they reduced their policy by 25 basis point and also willing to stay active in foreign exchange market. The statement was pretty much dovish with dovish projections. The chair Shiganel is also was dovish on that day. We do know that from here that the inflation is down close to 0%. Uh, but we are having a strong labor market, unemployment sitting at 2.6%, and also growth is doing very decent. 2% is year of year. So, I mean, I wanna, from a policy point of view, from a data point of view, I am tilted toward uh, dovish, but with the dollar getting weakness, I can't compare apple to apple right now. It just seems to me that if I want to go short euro Swiss franc, it's going to be very tricky because we don't know. I don't know that which pair has more potential to get stronger or get weaker. So all I can say that is on a Swiss franc pair from a Switzerland, it's just nice to approach this pair as a wait and watch approach. Now, okay, that was from the Swiss franc. That was my thought on Switzerland. Now moving to the Japanese economy. Last week again we haven't had much from the Japan. So we do know that there's some hawkish commentary we have received. We do know that growth is not doing great in Japan. Inflation is nicely rising, following 2.9%. Wages are also ticking up, and the recent GDP numbers now we have received on 16th came in really nice. Let me just show you the recent ones. Okay, yesterday, and here are the GDP numbers. So all of the digits came really nicely, showing that the Japan is doing pretty great, which eventually led to buying in. If I just show you here on my screen, right here. Okay, so as I can see that, all I can see that this pair has been doing really nice, pushing lower. But my key interest zone area is right now it is sitting 1.151 zone. A stronger GDP growth eventually helping the yen to get stronger. We do know that the dollar is weaker, but any retracement out of this level, I'm willing to take that risk, to be honest. And I'm just waiting for the price to hit this target level before I want to jump into the trade. So that was from the yen side. Uh, Other than that, we know. I think let's just have a look at what we're gonna have this week. No, we are not having anything from yen side. So now let's talk about Aussie and Kiwi together because these pairs move very closely to each other, and let's just not spend much of time evaluating that where these two pairs land. So yeah, last week we have had not much coming out from Aussie or New Zealand. Uh, Inflation expectations is just at 2%. Never mind about that. Just forget about it. So uh, we are having cash rates from Aussie and New Zealand side. Okay, we are very well aware about that the tariffs are also having a really huge impact on these currencies too, because these currencies are highly correlated to China. What's happening in China happening in will happen to the Aussie and to the Kiwi. So if any tariffs come to the China gonna grow slow, and these two countries do very nice trade with the China, and if the China is not doing great, these pairs faces the headwinds. So RBA cash rate, and all I want to see from uh, this interest rate decision is that giving us any surprise. Holding 4.5 3 4.35% is gonna surprise us, but doing nothing, going in line with the market expectation by 4.1% is not going to give us anything to work with. And from a policy statement side, if we can get any guidance on what they're gonna do in the future, gonna help us eventually evaluate this currency, that which way it's gonna go. Again, the tariffs are on the driver's seat, not these events. So we will. It's just taking as a pinch of a salt. Okay. If we get anything nice outcome from these policy decisions, we can favor, or we can have a nice entry. All I'm seeing is that this pair is trying to break this huge resistance area, and this trend line is also about to get broken. I want to see is that if we get a nice, even though in line, or if they go 4.35%, I can see that this pair may go down like this before reaching back and breaking above this zone. So this is how I'm seeing if we get a hawkish, but this pair eventually, uh, oh, sorry about that. If we get any hawkish, then I'm believing that this pair will go up like this. Any hawkish, and if it goes in line with the market expectations, well, if I see any weakness happening in the Aussie, then of course next day in the morning I will try to buy the Aussie. So again, these are all my thought process. I'm not convincing you to follow as I'm doing. Just do your own research, okay? Now, looking at the Kiwi, again, same thing, market expecting 50 basis point of cut. Same story, just like Aussie, tariffs are on the driver's seat. And if we get any surprise on the Kiwi side, I'm also very keen to buy the Kiwi right now at these levels. Uh, so if it does breaks this above from here, I think it's gonna give us a nice price level or anything. I just have a alert sitting at this 5.70 level. If I get any nice pullback to this level, it's decent to buy from here. Anyway, tariffs are the main drivers again, and from the other side, we're gonna have employment change and unemployment rate coming out. Uh, Again, it's just another data. Tariffs are really very important for the market. So any news from Donald Trump, especially on Tuesday, are gonna give us new bias or maybe new direction which way we want to go. Now that was the Aussie and about the Kiwi and okay, so let's just have a look. Our last pair, not least, it's gonna be the pounds. And starting with the BOE rate decision we have had, uh, they cut at 25 basis points as expected. Because why it was dovish? Because man, which non-hawk is actually voted to cut the rate, not even just to cut the rate. She voted for a 50 basis point of cut, which really was very dovish from a market point of view. But it was somewhat mixed bag because we have had inflation forecast. According to the bank, the inflation will stay above for higher for longer, and they expected the GDP to stay lower from their previous projections. So overall it was pretty much a dovish rate decision because of the man voting for 50 basis point a cut. But with these two things, it just made this pair to trade, just made us to trade it tricky. It was very tricky to trade it, to be honest. So we We have had man, but next day she just made a U-turn, stating that, wait, I did not meant that I'm gonna vote for 50 basis point continuously. It's just that I saw that this thing, and that's why I opted for this one, but it's not gonna happen again. So she just made a clear U-turn. So it just eventually it became a mess. Anyway, uh, that was the rate decision we have had, and this week we are going to have let's just have a look at last week. Last week we had GDP numbers coming out from UK, which eventually came. Just give me a second.